Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the market. So Trump signed the China trade deal today. It's not a sell the news event. In my opinion, the market has moved on from that. And we're now looking to tech sector earnings to be the short-term biggest factor in the market, in my opinion. The bulls are keeping full control. SPY just hit an all-time high in after hours by 2 pennies. And we had a significant dip buy at the end of the day. We now have a short-term line in the sand to be watching, including extended hours the last 2-3 days. 326.76, a higher low by 8 pennies. After hours yesterday, a higher low by 9 pennies. And then this morning, a higher low by 11 pennies. End of the day, held a higher low by 22 pennies. Incremental higher lows. That's the line in the sand. And if these levels do not break, the bears have absolutely no momentum. So that's that. Higher low every day the last few days for SPY. Even if we lose that pattern, I'm watching the daily 12-period exponential support, which has been holding for 5 weeks. A close under that level would catch my attention. We have a little support at 325.20, but I consider the clear daily higher low down here with this double low at 320. I would not consider the daily uptrend lost if 325.20 were to break. IWM changed its daily trend. Higher high today, following through with its weekly bull flag confirmation. Hourly chart straight up today. And bulls are strong. Anything above the low of today on IWM is an hourly higher low. Bulls have space to consolidate and stay in control. QQQ pulled back a little bit today. We do have a double top at the all-time high. And we have not set a daily higher low since 212.24. Again, daily 12-period exponential support for 5 weeks. Anything above 212.24 is a daily higher low. Hourly time frame. Resistance is 220.69, and then that double top at the all-time high. So if we're going to see red flags here, I'm going to have to see solid bear days, close at the low of the day, more than 20-day average volume, and a loss of the daily 12-period exponential support. Because any buy at the daily 12-period exponential support for dozens and dozens of tickers in this market over the last 5 weeks has been a good entry. We'll see if that ends up being the case again. XLF, again, my line in the sand, 30.46 after all these tops at the all-time highs. And the all-time high that we just hit a couple weeks ago is only 0.35% higher than the all-time high in 2007 before the crash. So as far as I'm concerned, it is a triple or quadruple top at this level. And if we were to break 30.46, that's the first red flag that more significant consolidation than we've seen recently is coming in the market. XLV, daily little bull flag confirmed, new all-time high, very convincing. Remember the cup and handle we talked about? That's the cup and handle confirming. Looking at it on the 4-hour time frame, I don't like it. We'll stick to the daily. High, consolidation, double top, inability to break resistance. Technically we broke it by 9 pennies, but call that a double top. There's your bull flag. There's your breakout. Let's see if that can continue. And the debate did not scare healthcare and biotech sector bulls. Technically, the biotech sector has a daily higher low and higher high, so we are confident in our weekly higher low established at 91.83, and now the bulls are just looking up at 98.79, our recent high, as short-term resistance. Keep in mind the healthcare sector is either the second or third largest holding in the S&P 500. It fluctuates with the financial sector, so the fact that it's cup and handle breakout and all-time highs is keeping the market strong. Best case scenario for the market bulls would be for QQQ to consolidate and form a daily higher low holding daily 12-period exponential support, while XLV takes over and breaks out to pick up the weight. And we would want to see XLF hold 30.46 if QQQ is going to consolidate on the daily. What the bulls in the market do not want to see is an XLF break of 30.46 and for QQQ to lose this daily 12-period exponential. The VIX Still building a base of support here, still in a weekly equilibrium. 1170 is that level, and it is still holding. Low, high, higher low, lower high, trying for a higher low. Gold bulls showing up. I like the 12-hour time frame for clarity on precious metals. Anything under 1563 is just a lower high. Bulls are liking the fact that we broke the base in the 1540s and the bears saw no follow through, but we do need a 12-hour trend change for the bulls to regain solid momentum. Daily exponential support is holding. Weekly consolidation looks just fine at this point, but we are in a 12-hour downtrend right now. And silver is the same. Anything under 1815, little lower high. And we are not holding the daily exponential support as convincingly, and the weekly pullback is a little bit more significant, coupled with the fact that we did not break the high of September, which gold blew through. Gold blew through that high of September. Bull miners, nice follow through. So hourly, higher low established with the low of today. Let's turn on extended hours. So very brief consolidation and another big bull move. Increasing bull volume, significant. Daily time frame, a little bit choppy. When it's like that, I condense it down to the 2-day and it's much more clear to me. I'm looking at a low where we came from on the bull break, top, higher low, scouting a lower high compared to 3684. And if we do get that, we'll have an equilibrium to be watching into the end of January. But congrats to the bull miners. Really nice 2-day bounce. Gold didn't do a whole bunch during that 2-day bounce. Little bit of upside. That's all the miner bulls needed. Oil. Bearish reaction to the inventory report. 4-hour exponential resistance. Highlighted that yesterday. Rejecting still again today. Have to get over that. Anything under 58.35 is just a 4-hour lower high. Natural gas. This is why I do not trust the natural gas bulls while we are in a monthly, weekly, and daily downtrend. Sure, it was a nice bounce, but it was just a daily lower high. Bulls have to hold 208.4 and break 225.4 to change this daily trend. It's possible, but we need a bullish reaction to the inventory report tomorrow. And that's where we stand in the market. We know what the bears have to show us for any kind of notable weakness in our major sectors. And other than that, business as usual for the bulls at all-time highs. So we'll keep an eye on tech sector earnings. Netflix will be the first to report. Everybody will react to Netflix, and then they'll come one by one. Blow off top for BYND and Tesla yesterday, pull back today. We're watching for hourly oversold bounces in these two names tomorrow to look for daily higher lows. Headed to Mexico for a Chart Guys members meetup. So no video tomorrow after hours. Monday the market is closed. And I'll be back eventually. But it may be a bit before you all see me again. Hope you have a good rest of your night. See you soon.